In this episode of Investors and Operators, I am chatting with Doug Song and Dan Lee. Doug, some people consider you the OG of the independent sponsor community. The one, the few, the proud, the OGs of the independent sponsor community. And there are few people who have your perspective on this. So it is awesome to hear your story during this episode. And Dan and I, Doug, you asked how Dan and I have known each other. And Dan, I'll let you fill in that gap.
Yeah, Jordan and I met in 2016. He was this young entrepreneur with a terrible business idea, and I tried to talk him out of it, and but loved his grit, loved his enthusiasm, and just said, I'm gonna help this guy, and I hope I'm not doing him a disservice by by helping him believe in his dream. And that business didn't work. Ultimately, he got traction, but didn't work. But ultimately, I've got involved in some other things he's working on, and I'm just a huge fan. And he's just someone that I think is highly collaborative, energetic, and has more kids than I can count.
All of that is pretty accurate, actually. And Dan's also been involved in our nonprofit, but I thought it'd be fun to have Dan in this conversation just because how well you and Doug know each other. And let's go back and just like, I mean, when did you guys meet? Like, what's the story? And then Doug, let's kind of go into your story on, the life of an independent sponsor.
I think Dan, we met, I don't know, I want to say it feels like 2 decades ago.
Yeah,
We met, we were both in finance, doing investing and different firms, and we met, I think through networking. And then we became friendly because we were both in New York City with families, and we just became fast friends. I mean, it was just kind of a match made from heaven from the very start. So we've known each other ever since, and we've been following each other's careers with great interest and
yeah,
trying to do things together. And I consider him an old friend in this industry.
yeah. Jordan,
Awesome.
there's actually a theme here. When I said I met you, I met a super nice guy with a terrible business idea. That was the same with Doug. He was like, "I'm gonna go out and I'm gonna go out and buy companies without capital." I was like, "What? Who does that?" This was like 2006. I'm
Right.
like, "Okay, I mean, you're a super nice guy, so we'll hang out, but I don't know what you're thinking." And the last, I think you know this. He just won Independent Sponsor of the Year for My Global, which is well deserved. He's built a firm and a first class reputation in the space. So I mean, I'm a massive fan.
That's awesome. Well, let's take it all the way back, Doug, on your story. And I heard in one of a podcast that you're an immigrant here from Korea, and you grew up in a family of entrepreneurs. So that might be the best place to start this episode. Is talking about the entrepreneurial story with your family and growing up.
Yeah, happy to. And thanks for having me on this podcast. I would say that really defines me in many ways. We came here to this country about 51 years ago from South Korea. And we were typical immigrants. We came here with nothing. And my parents and their relatives that also immigrated here, they all became entrepreneurs because they had no other option. So they started with fruit and vegetable stores. Our first store was actually in Brooklyn in the 70s, and that's how I grew up. We had small businesses like that. We all worked in the stores after school and on the weekends. And, you know, I just saw how they strived to give us, the next generation, a better opportunity. And what drives me today is really that mentality, right? I have this immigrant chip on my shoulder and I will never lose it. It doesn't matter how successful I think I am or other people think I am. I will always have that chip and continue to strive because of that background. And I really, I'm so appreciative of my parents and that generation for doing what they did, for the sacrifices for us.
Are there
I've
any
never heard you. I've never heard you say it that way, Doug. That's incredible. That actually makes me very emotional. That's very cool.
Well, Doug, if you can dive a little bit deeper into that, like, are there any particular stories of, working in the family business or just tough times, you're like, we don't know how we're going to get through this, but we did, and we're going to find a way. Like, are there any particular memories that like stick out? The ones where you maybe come out on the other side, or when you're just in the thick of it.
Yeah, it's there are numerous stories, but I guess number one is I just saw how hard they worked. They worked 7 days a week, no vacations, long hours, arduous work. And one of my fondest memories to this day is getting up at 3 or 4 in the morning with my dad. That was every day. Just imagine that every day and working till late at night, every day. So first is just how hard they worked. And that really taught me that piece of it. And the second is, we had some businesses that didn't go well and it failed for a variety of reasons, right? Poor execution, wrong location, it's myriad of reasons, but I saw a bunch of businesses that my family owned and ran that didn't work out too well. So that was really, eye-opening as well. And what it taught me is, and they never gave up, right? They went to the next business after that. They never gave up. And what that taught me is, as an entrepreneur, I think one of the true, things about being an entrepreneur is you really have to persevere. You have to learn from your mistakes and persevere, right? And go to the next. And I really picked that up from that experience. So those are just two examples. There are others, but those are just two examples I picked up from my parents and family.
Are there any times when maybe you guys went on a vacation and you just kind of had that moment like, this is what it's like to finally have safety, security, be on the other side of this?
Yeah, one of my proudest moments is buying a house for my parents some years ago. That was one of my proudest moments when I could do something for them. Recently, we took them to Paris with my kids, and my parents, they're in their 80s now. This was the one city that they haven't been to, the one, bucket list city. And so I just decided during our spring break, that we're just going to take you, right? And we went with my kids. It was a great experience for everyone. I assigned each of the kids, I have twins, a grandparent to look after while we were in Paris. So they were assigned a grandparent each, and it was a fantastic experience. So, those are the things that matter in life, right? That's what really matters.
Yeah. What was it like when you bought the house and your parents walked into that house for the first time and that you bought for them?
It was one of the proudest moments I will ever have. And, I get emotional even thinking about it, that, I could do something like this for them, that, they sacrificed their entire adult lives for us. You can see I'm already choking up talking about it, but it was one of our proudest moments for sure.
That's amazing. It's I can relate to that. I remember when we have four kids, and our oldest, who's 8 years old now, when she was an infant, my Chinese in-laws also lived with us in 450 square feet in Hoboken, New Jersey. And I'm like, I went from doing investment banking to this, and it was just such an ego check. And it's like, well, how bad do you want to be an entrepreneur? And what are you willing to sacrifice? And also, what is the family willing to sacrifice? And, now that was in 2016. And then now, you know, we just bought a new home here in Georgia, north of Atlanta, four kids. My in-laws live with us for 6 months. And I look at them and I'm like, I just, to be able to go through this journey together with them, who we sent our kids to China three times because we didn't have the money. Or the first two times we didn't have the money, and our business was going under, and like, we have to focus. But it's just amazing.
Jordan,
Just
you had a way better excuse at the time, by the way. I remember when you told me they were going for cultural, you know, reasons. So well done.
well, let's talk about this idea of a chip on the shoulder. Dan, I don't know if you have any particular stories around this of having a chip on the shoulder. And yeah, and Doug, I mean, your story is makes complete sense, and just like, you never lost that immigrant mentality of the work ethic and having to earn every day kind of mentality. But Dan, curious to hear if you have any stories around that.
Yeah. So I have a huge chip on my shoulder. I had my whole life. I don't know where it comes from. I guess my grandpa was an orphan who worked in the mines and then became president of Toastmasters, um, and the head of the Chiropractic Association. So I guess some of that got into me, and it's led me to some really bad places. By the way, made some really bad decisions and doubled down on them because of perseverance. So for me, discerning is one of the key things that I'm working on. But at the moment, I've got a massive chip on my shoulder because I took a big swing a year ago and left the catbird seat to try private equity, and it didn't work out. And I was devastated. I still am. I love the firm. I love my bosses, and I still do. They're great friends. I'm cheering them on harder than anybody. But we all realize it's just not working. I tried to boil the ocean. Um, that didn't work. So I'm starting my own firm now, with a massive chip on my shoulder. I've got no computer, no email address, and I've got four clients. So things are starting off in a week of working on it. So um, I'll have an announcement next week, but it's literally serving the independent sponsor community. So I realized I'm tired of just selling a product, right? They were great products, but I was tired of coming into a meeting and figuring that, like, kind of binary. Do you want this loan or this control equity or not? And now I'm just gonna serve the independent sponsor community by being a merchant bank, coming in and just saying, hey, what do you need? Like, we can give you outsourced investment banking services. We can capital raise. We can help you with your M&A execution. We have what you need. And and I'm going to do the opposite of what I did in private equity. I'm not going to boil the ocean. I'm going to go deep with a few strategic relationships. And Doug, you're at the top of my list, so we'll definitely be talking. But I've got a great partner, 28 years old. Guy is just a grinder, and I'm super lucky to have found him when I did, because I was in a really bad place 4 weeks ago, and today I couldn't be more excited about what's going to unroll the next 10 years.
That's awesome, Dan.
Doug, when you think about your entrepreneurial journey, what are some moments that you've had that have been uncertain? And maybe it's the past 30 years. But like, are there any particular moments that really stick out? Maybe it's, raising capital for your first deal, or you've been in a tight spot with one of the portfolio companies. Like, can you talk about some of the uncertain times you've had and how you got through them?
There have been quite a few. I mean, we've been around for a while. I co-founded Prodos Capital in 2003, but I was doing principal investing before that, before my decade-long career in investment banking on Wall Street. I would say that there have been some difficult markets for sure. You could throw in COVID, you could throw in the financial crisis. We had to live through all of that. And we had to live through some very difficult times for A, getting deals done, but B, portfolio performance, right? Portfolio company performance. And it was just really difficult times to navigate. But I think the lessons learned is you really you need to adapt, I guess is the best way to say it. And you need to persevere. You have to find a way to break through those crises. And I think one of our topics perhaps later is to talk about, the new normal is, there used to be a point in time when we used to have, black swans happen every decade, right? Once a decade. Now it seems like we have black swans every year. There's always something. So I think the new operating model or mentality has to be that there is going to be a black swan every year, an event, right? That's going to come out from nowhere that you don't expect. So you really have to structure your deals and manage your portcos in that manner. I truly believe that's the new normal now that we live in today.
Can you talk a little bit more about that? Like, what are some maybe examples, maybe not by company name, but of how you're preparing for a black swan event?
Yeah, I think generally speaking, we are by nature conservative in our valuations and cap structures. And I think the first step is you have to be conservative. You can't over-lever these companies, right? Knowing that there could be these shocks to the system, right? So you have to be conservative. I think one of the keys is, and we're focusing more on this, and Dan knows this very well from his debt investing days, is we really focus, you have to focus on free cash flow. It's not just about what multiple you pay on EBITDA. You really have to look at the entire picture and you have to look at your free cash flow and you have to stress test it because if your free cash flow doesn't work and you can go upside down quickly because of a shock or too much leverage or high interest rates or whatever the case may be, you could be in trouble very quickly. So you really do have to pay a lot of attention to free cash flow. And the last thing I'll say is, we really invest in businesses that are sustainable, that they have what I call a reason for being, right? They're not going to go away in the next recession or a downturn. They have a reason for being, and they're going to survive those kind of crises. So we really try to incorporate those things into our investment kind of thesis and strategy and management. The last thing, of course, is people. You want people that will work through all of these issues because inevitably there's never a straight line. In the investment business, especially in the lower middle market, there is never such thing as a straight line. It's always
Yeah.
jagged. So you really need to have the right people around the table that's going to be able to navigate with you, whether that's management, capital partners, your operating partners, your board members, your own partners. You really need those people in place.
Doug, if you pause for a second and think about the ecosystem you've built over 20 years, just talk about the people around you. I mean, you started it was you, right? And it was you trying to convince people to sell you their business when you didn't have capital, right?
Right.
So that's it. It was you persevering, grinding. Talk about the ecosystem that you've built by doing all the deals you've done and just working with the people and collecting resources.
Yeah, absolutely. And I'll go back to the beginning when we co-founded Prodos. I co-founded Prodos with a gentleman by the name of Arnie Dietrich. And I think you may know him, Dan, since
Yeah.
we've known each other
What was
for
his
so long.
background, Doug? Remind me.
Yeah, so the reason I partnered with Arnie was he was my senior in terms of age, first of all, and experience. He was the
Mhm.
far wealthier of the two. And he was a management consultant before it was called management consulting. And that was the first 20 years of his career. And then he was Sam Zell's first corporate deal partner, operating partner in the
Holy
80s.
cow.
And then he had a very successful, what is now called an independent sponsor firm after Sam. He left Sam. So all throughout the 80s, just imagine, he has this management consulting background. He was CEO of a number of Sam Zell's companies, turning around the businesses, growing these businesses, exiting. They made tremendous amount of money together. And then he had a successful um, independent sponsor firm after that. And for me, Dan, he brought everything that I did not know. He was an operator, right? He's been through that. He ran his own firm very successfully. And then, I came with the deal background, the deal making background, the capital structure background, and it was a really good complement. But for me, he brought everything that I didn't have.
Mm.
And it was just a great partnership. And it brought us credibility in the beginning. And from there, it was really all about adding really talented and entrepreneurial people. And I think one of the keys for me, Dan, is finding people that are like-minded and, really come from nothing. I really wanted to build a firm, a culture where we had people that came from that kind of background, right? They did things on their own. They evolved on their own. And I wanted people like that because I want problem solvers. I want people that are going to be able to do many different things well. And that's really what an entrepreneur is at the end of the day. And people that are obviously smarter and more talented than I am. I also try to be very, very conscious of that, to pick people like that. And we've surrounded people at the firm with people of that ilk, and that's been one of the greatest parts of managing this firm.
D-
By the way,
Doug,
Jordan, I left out a really important part of my business model that Doug needs to hear.
yeah,
In addition to providing merchant services and advisory services, because we're just getting started, we're going to do it very cheaply. So it's very, very important for you to know that, Doug. We're leaning in on relationships, and we're gonna focus on aligning our interests. And yeah, there's anyway. This isn't meant to be a commercial, but I did want to
yeah,
mention that because it's important. We're looking for
100%.
partnerships.
Doug, um, it's interesting you talk about kind of hiring people who have come from nothing or just similar backgrounds. And I want to dive into that a little bit more because I think some of the hiring mistakes that we have made or I have made has been because I wanted to hire that person who might not look like they have it on paper, but they have that kind of X factor, the ambition, the drive, because I came from that background. And I was almost projecting my background onto the hiring process as opposed to hiring someone who is can do the job that we need. And I'm just kind of interested like how you have maybe navigated that and maybe some of the hiring mistakes that you've made, what you learned from that, and then just kind of how you approach hiring now. Because you have what, six portfolio companies that are active?
Yes, we do. I think that one of the things I've learned over time is hiring somebody, whether it's at the portco level, at the firm, or at the firm level, that has a big ego has not worked historically very well for us. So we tend to stay away from that. And one of the most important things for us is when we're looking to do a deal or hire somebody is obviously that's part of it, but if I smell that, they're just not going to be a good partner for us. And, we look at people that work at the portcos as our partners. We don't look at them as employees at any level. We really, truly look at them as partners. If we think that they're not going to be good partners for whatever reason, we'll just walk the other way. It really doesn't matter what their credentials are. Doesn't matter what school you went to, right?
Yeah.
If we just don't sense that, and that's as much gut as anything else, I hate to say it that way, but
Have you made the mistake in the past where
yes,
like,
you
God, I
have,
just love
because
this?
when you're looking at a company to acquire, or you're interviewing somebody for your firm or one of your portcos, obviously they're going to put their best foot forward, the best face, right, on the screen and in the interviews. They all sound great. They all went to great schools. All had great scores. They had all of this, all of these merits. But it's really, what I've learned is until you get into the trenches, you truly don't know. I've made that mistake countless times. You really have to get into the trenches to know somebody's true character. When things are going great, it's hard to tell. It's only when things start going sideways that's when true character comes out. And if there's anything I learned, it's that. So when we do interviews, I always ask, or I try to ask, tell me about your toughest moments. A real problem that you've experienced in the past, much like your question earlier, Jordan. And how did you manage through that? How did you perform? How did you figure that out? Right? That's an important thing to understand about somebody's character. You're never always going to have 100% clarity on this until you get into the trenches, is my true belief. But I think you have to kind of figure out as many things as you can. And I also we always do reference calls. That's the other thing I've learned over time, Jordan. And I do those myself if I can. And I spend a lot of time on that and really also test, sort of tell me about a crisis. How did this candidate, manage through this crisis? I don't want to just hear about the rosy stuff, right? I want to hear about how they made decisions, how they performed during these crisis situations. So anyway, that's some of the tools that we incorporate today.
Yeah, I've got a great buddy, like a brother of mine, who is CEO of a business that just had his 30-year business partner try to push him aside, like all in on pushing him out of the business. And it was a 6-month process, and it was incredibly painful. But he learned through that COO didn't have his back, and his board did. And now he has more conviction in that relationship than ever, right? And so that going, I think that I couldn't agree more that you got to go through tough stuff to really test the character, and it's opportunity. At the end of the day, it creates an opportunity. And just one other thing I would add, Jordan, is just it's critical you know what you're not good at. I'm terrible at hiring because I love people and I get sold very easily. The only thing I'm worse than interviewing is picking wives. That I'm worse at. But on the record, both my ex-wives are very good people. We were just terrible matches. But you got to know, I'm not good at picking wives, and I'm terrible at interviewing people. I'm terrible at picking partners. I let my partners do that.
It's interesting you bring that up, Dan, because like I'm the exact same way where I get excited to talk to buddy and
Mhm.
almost like I'm trying to sell them on coming here. And
100%.
it's and that's part of the sales and BD and marketing side of me.
Yeah.
And you have to
Yeah.
have that other person who is going to ask the more detailed technical questions,
Mhm.
or or play bad cop in terms of like just challenging them on certain things, where I do. And like that's part of our core values is candor. um but by nature I just love being around people and have a y'all come
Yeah.
mentality. And it's interesting
Yeah.
because that also plays into pricing. So like our
Mhm.
videos used to be $2,500, and then Jing said no, they need to be 10. And then we did more and more work. Like no, they're not 10, they're 25 plus. And then there's that sensitivity in the market. We're like, well, what? We didn't actually test the market because I didn't want to not get hired on a deal. And the subconscious thing is around like being rejected from it,
Yeah.
right?
Yeah.
That's like the
Yeah.
underlying thing, and it has its pluses and minuses. I think it's just understanding the team dynamic and where our strengths and weaknesses are so that the others on the team can complement that.
Yeah.
Because,
That's bingo.
on the other hand, with Jean, like she wants one meeting a year. I want one meeting every hour. I want two meetings per hour. Like when we go to McGuire Woods or any of these other conferences, like that's gives me energy by the end of the day. She's like, I don't even want to come close. No, I don't want to be in the same city as that.
Right.
That's because you love people, Jordan. You thrive in that environment. Not everybody's like that.
100%.
Yeah.
What let's go into some of the portfolio companies or just some of the fun stories on building. I think maybe if you want to, what's one that you could dive into, Doug? Is it Flex or some of these other companies? It'd be awesome to kind of walk through the evolution and the journey of them.
Yeah, I mean, I just talked about Flex on another podcast recently, so I'll stay away from that. But I could talk about another early deal. It was a company called Merrill Industries. We were actually approached by another independent sponsor, an emerging independent sponsor that really never did a deal before. They had this company under LOI, Merrill Industries. It was a corrugated manufacturing company in Connecticut. And we looked at it. It was pretty early in our history, and we looked at it. It looked like a really interesting company. It had 20-25% EBITDA margins, highly customized corrugated packaging solutions. It was a second generation owner. It was around for 40, 50 years. And we thought it was interesting, good valuation. And so we agreed to partner and we got the deal done. We did all the things that you could imagine. We looked at acquisitions. We put in an ERP system. We put in other types of financial reporting and other things. And it was just a great company, and the cash flow was just tremendous. We grew it as well, and over 4 years we grew it, and we paid I think 20% dividends, cash dividends every year. 20-25% cash dividends every year. It was that kind of business. And then we sold our position. We exited through an internal recap. And that emerging independent sponsor, by the way, still owns the business. And it's just a great business. But we ended up with a 4 times return overall after 4 years, just because it was just a great business. And, you know, it taught us that you really need to look for companies with those kind of niche positions, great cash flow characteristics, right? They had a reason for being, all the things I talked about before. that was sort of one of the early deals for us that kind of defined our investment strategy. So we look for deals like that. We're probably looking for slightly larger deals in that category, but the characteristics are similar, right? It 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 really, from small to big, it's just similar. You just want to do larger deals now.
How long was that journey? What are the things that you really did well during that, that you can advise? Because find free cash flow in a niche business, like, yes, okay, we all want that.
Yeah.
But like, what are some of the things that you did operationally?
I would say the primary challenge and opportunity was that it was a company that was run the same way for two generations. And so to institute change, to professionalize the business, it did take quite a bit of communication and management to do that successfully. So that was one thing, and we learned a lot from that process, I believe. And we also transitioned the CEO, who was the primary owner and the son of the founder, to his number two, who then became the leader. So we successfully had management transition as well during those 4 years. So I think more than anything else, it was how we managed sort of the the professionalization of the company, the institutionalization of the company, and then the management transition. I would say that that was one of the first or early deals for us where we really kind of, learned. And I would say one of the lessons learned from that experience is you now we kind of incorporate this is when you know that there are missing elements. We knew that we had to bring in an ERP system, for example, but we waited because there was such a, we knew we had kind of a culture, a certain culture there. So we waited till after close. But what we've learned is, if you wait till after close, there's resistance, sometimes there's delays for whatever reasons, and it just takes longer. And it took us, I think, 2 or 3 years to institute the ERP system from closing. So what we do now is if we identify that that is a missing element up front, we look for that up front during due diligence. We start that implementation during due diligence. Same thing if we know that there's something missing, like we need a CFO or a controller, we start that search during due diligence. We don't wait till post-close anymore. We start all of those work streams up front. So, typically what happens is you have your 100-day or 108-day plan, right, post-close, and that's part of your underwriting. What we do now is we start that process even before we close because we know that it takes time, number one. And number two, once you close, there's going to be other agenda items, other priorities that pop up inevitably, or a black swan event, as we talked about before. All of these things can delay. So we now are very intentional about what we do up front. So that is definitely a lesson
So,
learned
Doug,
from
I
that
understand
Merrill
the
experience.
timing element. I guess talk to me about how do you balance the risk that the seller says, "Oh, wait a minute, I can do that myself, and I can reap the value of that," right? How do you make sure? Maybe it's as simple as that it's the right partner. That someone that would do that sort of smokes out that they weren't going to be the right partner. But just give me your thoughts on that because that's I immediately thought, why wouldn't they just do it themselves?
Yeah, absolutely. Well, if they
Yeah,
could have done
it's a
it
point.
themselves, they would have, right? I think, and you know this as well as I do, Dan, that many of the owners and management teams in these lower middle market companies, they don't understand a lot of these systems. They fear it, or they don't want to deal with it themselves or tackle it on their own. And so we are looking for those type of situations where we have an owner and management team, and we're very intentional up front. We tell them we believe that this is what's needed. We need a new CFO. We need to bring in an ERP system. We need to create a real marketing plan. We need a budgeting process. We say all of this up front and we make sure that they're on board, Dan, because if they're not on
Right.
board, then that's not going to be a good
Yep.
partnership or outcome, right? If we get that resistance up front, it's not going to work post close. What's going to really change? Yes, you may own the company, but if they're resisting, I found that it just doesn't work very well. So we want to make sure we have their buy-in up front, and that's why we can
And are
start
you
it up front.
targeting situations? Do you want the sellers to roll a little bit or a lot? Do you care? Have you done it both ways?
Yeah, we've done it both ways, but I would say the preference is to find owners and management teams that really, what they're looking for is they're not hiring an investment bank to run a broad process and they just want top dollar and fastest deal, right? Cleanest, fastest deal. That's really not our kind of opportunity. That's not really our opportunity. What we're looking for is, yes, we have to pay a fair price and have a good structure. But what we're looking for is an owner and management team that's really looking for a good steward for the business, a good partner, somebody that's going to help them solve a number of issues. Whatever those issues are, it could be they need more working capital. It could be they need to professionalize the business. They need better strategic development or business development. Whatever it is, if we can bring that to the table, those are the situations we're looking for. And somebody that really cares about the culture, the culture, the brand, the heritage, their employees, the community. I mean, many times they're very important to their communities. We're looking for those type of situations, Dan, because I find that that's where, as an independent sponsor, we're not coming in with a fund, right, a big fund, but we really do care about all those things. And if we can match that up with the owner and management teams, that's where the magic happens, in my opinion. And then it's all about the partnership and how we do it together
So
from
Doug,
there, and
maybe
aligning
for the
interests and all the rest of it.
first time independent sponsors out there, can you walk us through a sample deal, how it is structured, and what the economics are of it? And let's use a super simple $10 million deal. Like, walk us through the structure and the economics, if you wouldn't mind.
Yeah, I think, um, first of all, if you're winning in a broad process, you're losing. And if you come to the table with that kind of deal where you're paying 9 times for a 3 million EBITDA business in a broad process, you're not going to get a lot of traction with folks in the uh, investment or capital community because chances are they've seen the deal, number one, and number two, they're just going to think it's just too expensive, and even if you can add value or have an angle, it might just not be enough, right? The underwriting is just going to be too tight. So I would say, for my first comment is, I would stay away from situations like that. I would say focus on situations where you know that you have an angle, that you have an edge. That would be my first comment. Beyond the particulars about capital structure and economics, make sure that you can really find a situation where you bring something to the table. And that could be as simple as having this great relationship with the owners and management team. That counts for a lot. It could also be you have domain expertise in a particular industry that you're targeting or signing up. It could be that situationally you have been in these type of situations before. Maybe it's a roll-up situation or it's a turnaround situation or whatever the case may be, that you have specific experience and track record in that kind of transaction or situation or opportunity. I think you have to have an angle, or maybe you have a great operating partner or a board member or board members, whatever the case may be, make sure you have the angle. From there, then everything else will flow, right? And from there, I would say, 10 million is probably on the low side of a transaction or EV, but I would say that, there is a whole community now versus when I started, and Dan, you remember this too, when we started, 20 plus years ago. I would say it was very difficult to pitch capital partners. They didn't really understand what we were trying to do. You're trying to do a deal without any capital. I don't understand, right? It just, you got a lot of blank stares. I think today it's
So
institutionalized.
Doug,
Now you have capital that are very
Oh,
specifically
and by the way, I'm
designed for
only
the
yeah,
saying
enhanced
no, I was
10
just gonna
million.
say,
sponsor
I think
model. Go
that's
ahead,
I'm
Dan.
only saying 10 million because I am horrible at math and I like small, easy numbers.
so. I was just gonna say, Doug,
No
your
problem.
last
I
point
could work
is
with that.
in my opinion, super underappreciated. People look at the growth in the independent sponsor community from, 100 people at McGuire Woods to 3,000 over the last 15 years, and they think there's just a lot more independent sponsors. But the other thing that's been fueling it is capital providers and LPs have realized this can be better, right? And investing in a blind pool has real issues, and especially right now. So the talk about that evolution, the change in capital availability, because I'm convinced we're about to see it go through its next wave of growth with what's happening in private equity with all the funds that are stuck. The LPs are realizing I can underwrite deal by deal and get better economics, way better economics, right? And so there's risks in it, right? But talk
Yeah,
about the
yeah,
the growth and capital options.
yeah. No, 100%. Yeah, I think you're absolutely right. I think I would divide it into various buckets, and I'm just doing this on the fly. But I would say that in the beginning, and today, SBIC funds have been a major
Yeah,
contributor or capital source for independent sponsors because if you're dealing with, transaction values of, 10, Jordan, to use your example, to about 50 million, I would say the SBIC funds are great partners because they can provide mezzanines, and sometimes now many of them can do one-stops, and they could provide, let's say, up to a third of your equity, right? And so that, to me, that's the breaking the back of that transaction. And then you could fill in the rest with high net worth or family offices or other things. I would say so. That's one bucket that has really grown because of the partly because of the marriage between the SBIC funds and independent sponsors. I think also family offices has been very interesting to watch because, family offices, of course, have been around for a very long time, but you know, just like independent sponsors, Dan, has grown from, dozens of us to now thousands of us. Family offices have
yeah,
also had that kind of surge. And family offices, I guess, much like independent sponsor firms, are very different. They're all very different. But what I've seen is that there's been a proliferation, but also I think you're going to see more, right, with this great
right.
wealth transfer that we're about to see. But I agree with you. If you're a family office and you have a net worth of hundreds of millions or billions, you're going to have an allocation to blind pool funds, right? You almost have to. But you might have an allocation, especially if you own a business or have owned a business or currently own a business, you may want to have a little bit more control or influence over your investment decisions. And then you can do deal by deal, right? Where you can make that decision.
Right,
And
right.
maybe you can add value, maybe not, but you can make that decision. So I think you're seeing more and more family offices now participating with independent sponsors. And the last category I'll say is you have now this institutional investor base that's, kind of starting to really focus. And it goes from private equity funds to funds to insurance companies, right? Now there's dedicated funds, both debt and equity, to the
Yep.
independent sponsor model that are being raised. And so there's a whole kind of like evolution here, and I agree with you, Dan, that I think more and more attention will be paid to this market because at the end of the day, it's a source of investment opportunities that they may not see or have an angle on. And it's also a way to
Yeah,
leverage themselves, right? Much like
yeah,
we're looking to leverage
right.
ourselves, they're also looking to leverage themselves, and that's really
That's
the part of
so.
this game.
Just a couple of data points I'm going to make up, Jordan. That are representative. So if you think about like 20 years ago, being a billionaire was a big deal, right? So think about today. We have 700. I mean, it's like we have hundreds and hundreds and hundreds. That's true of people worth half a billion. That's true of people worth 100 million. So that's the growth in family office, right? It's gone. I mean, it's dramatic. And if you think about the growth in independent sponsor in McGuire Woods, you had 50 people at that conference in 2013. Half of them had a portfolio company, half of them didn't. So maybe the enterprise value of independent sponsors in 2013 was maybe $500 million, right? Like give or take, maybe. Now you got 1,500 sponsors, many of them, and those were all lower middle market deals, by the way. They were really small businesses, 3, 4, 5 million of EBITDA. Today, you have independent sponsors that have a portfolio of 3, 5, 10 portfolio companies, And some of these companies have 20, 30, 50 million of EBITDA. So the growth has gone from, half a billion to hundreds of billions of dollars invested, enterprise value invested in independent sponsors. And it's about to go up further. So when you think about, and by the way, that's taking market share from private equity. Right. So, and I don't mean that in a negative way. It's just a reality. If an independent sponsor is buying a business, that's a business that private equity didn't
Yeah.
can't buy, right? Maybe they'll buy it in the future, but they're literally taking market share like crazy.
Well, Doug, this is making me wonder of just like, why have you
But
stayed an independent sponsor instead of raising a fund? And why have you gone down this route?
Mm.
because I don't like proctology exams. Um, you know,
Is it bad that I
I
do?
think that this model. Yeah, yeah, I guess some people like that.
Regret that statement.
I, I think that I think that this model is very I think this model, I mean, there's pros and cons of both, right? And I think this model has some real advantages, the independent sponsor model. Those advantages are
Mhm.
it's highly flexible, right? We could do at Prodos anything that we think makes sense. We're not married to a specific charter. Now we have to be within reason. You can't do willy-nilly things, do things that you have no place doing. But I think you have great flexibility. And one of those flexibilities is not only the type of deal and the partnership structures and things like that, but it's also investment horizon. And if you think about it, the lower middle market, there's no such thing as a perfect lower middle market company. And I call it gestation periods. They all have different gestation periods. Not every time is a 3 to 5 year hold appropriate, especially with all of these black swans everywhere now. You may need to hold for a longer period of time. And guess what? If you're a fund and you have a 10-year life, you're going to really start being pressurized. I don't want to have that type of pressure. Now, that also goes into how you put the deal together in the first place, but that's another discussion. But I think that creates tremendous flexibility that we don't when we don't have that kind of defined time horizon. Now, we do go into an underwriting a deal with a specific time frame in mind, right? We go in saying we're going to be in this for 3 to 5 years. It's going to be a fast, allocation of capital. We're going to grow it quickly, and then we're going to flip out of this. Or and we're going to have all of that kind of confirmed by the capital partners, our operating partners, the management team, the owners, everybody involved, and all of our interests will be aligned that way. Or it's going to be a really long-term hold, right? Great cash flow yielding company like Merrill Industries that we may want to hold 15 years. You can't do that if you're a private equity fund. You don't have that kind of flexibility. The second thing I think that's really compelling about this model is the every deal stands on its own. You talked about economics before. We really didn't get into that, but every deal stands on its own. So if you have a blow up here, a blow up there, it's not going to impact your overall, right? It's not going to impact everything. Now it's going to impact your reputation and track record, but it's not going to impact your other companies because they really do stand on its own. The last thing I'll say is, I think, Dan, you kind of alluded to this, is, this community, and I've watched it from almost the beginning, this independent sponsor community, I think, is very special. Yes, it is finance. Yes, it is a subset of private equity. And most people that think about Wall Street, finance, private equity, think about sharp elbows, right? And you're competing against
Mhm.
everybody else, which I would say is somewhat true. But what's unique and special about this community and the independent sponsor community to me, and I've watched it evolve obviously over the decades, is that it's highly collaborative. I am always willing to help my fellow independent sponsors, and I feel like they have my back too, right? And we're always collaborating, sharing ideas, you know, um, and I don't really view them. We may perhaps be bidding on a deal, right, and competing, but even then, I don't view them as a competitor. I think of them as a collaborator, right, in this market. So I think that's very unique about this ecosystem, which I haven't seen in many other areas of finance and Wall Street. But I would say that those are the positives and why we've stayed in it. And
Yeah.
Yeah,
I hope
Jordan, I
that
think
So
almost
let
gives
I'd
you some
almost flip it
insights,
around.
Jordan.
It's 10 years ago. 10 years ago, you wanted to raise a fund because investment bankers wouldn't show you deals, right? I mean, literally, they would keep you out of processes or tank you in the process because they tell management he doesn't have capital. So, I don't want him to screw up my deal. That's changed dramatically, right? So the reasons to raise a fund are getting access to deal flow. That's not an issue now because it's a credible asset class. Access to capital, not an issue because for a good deal, especially for an independent sponsor as a track record, they can raise the capital and infrastructure, right? A team. Well, if you've got a portfolio of a couple companies, you've got management fees coming in, you can build a team. And then when you have a winner, that gives you capital to continue growing the team. So it's almost, I mean, it's sort of why would you raise a fund right now if you're Doug? You've got a track record, he's got a business, he's got a platform, he's got a community. And last thing I want, just really quickly, his last point is incredibly important. That's why I'm dedicating the prime years of my career. I'm going to make these the prime years of my career to the independent sponsors. And I think, Doug, you don't know this, but Jordan does. The name of my company, my LLC personally, is Leeway Collaboratives. So I want it to be, I want to be collaborative. I want to work with the people I want to work with. I spent 30 years trying to convince people that I worked with that this is a good guy. We should do business with this guy. And I failed a lot at getting them to realize that. And sometimes it's because I was wrong, by the way. Sometimes I I picked someone and believed in someone that didn't. I have a problem with discernment at times. But most of those times, those people were super successful and we would have been successful if we'd done the deal. So I love the fact that it's a kind of a family and that they're cheering each other on, and it's super cool. That's the coolest thing to me about independent sponsors is the people. It's kind of self-selecting. You got to be entrepreneurial, you got to be hungry, and you have to be collaborative. You won't make it in the community if you're not.
So, Doug, if you were to kind of break down,
Right.
or if you were to bucket the biggest pain points that an independent sponsor has when they're getting started, pre LOI, LOI, getting the deal done, then post acquisition, can you just kind of like if you were to teach a master class on independent sponsors, how would you outline that curriculum?
Yeah, absolutely. I would say the first thing, and I've said this on other panels and podcasts, I would say give yourself, if you're an emerging independent sponsor, give yourself 2-year runway because it, you might get extremely lucky and get something done early, or it might take you 2 years. And you need to make sure you have the capital wherewithal to survive for 2 years, and you need a very supporting spouse or partner. I would say the next thing is your first deal has to be a good deal. So focus on the deal. The lifeblood, the currency of this business is deals. That is the lifeblood. If you have a good deal, that is exactly right. You could have elephantitis, but if you have a great deal, you likely will get that deal funded and closed, right? You just need a good deal. And so I would say focus on that. Focus on having a good deal, surrounding yourself with good people, meaning management teams, operating partners, and then having an angle, right?
Hey,
Focus
Doug,
on
can
that
I
first
make a
good
make
deal.
a related point? Jordan, this is
Um,
this is really important. One of the biggest risks of being an independent sponsor is you're desperate to get a deal done, right? So it's hard. You're kind of brushing through diligence in a way because you're so excited that they agreed to sell you their business when you don't have capital, and you don't want to spook them. And you got a couple layers of diligence because you got to do your own. Then their capital providers got to do it. So they're kind of walking on eggshells trying to keep the deal together. So Doug's point is unbelievably important. That um, having the discipline to really do the diligence is really hard when you can see I'm about to make money. If I just close this deal, I'm going to start getting a paycheck, and then I can worry about how to fix it. Sure, maybe it's a little broken, but the fastest way you can ruin your reputation is by doing a bad deal. So, I mean, that point is critical. It's easy to say, really hard to do.
right. Yeah. And listen, we've been caught in that trap too, where you're 7 innings into a deal, and you have a lot of costs at that point, right? A lot of time invested, a lot of cost, and you're some in some respects you don't have an option but to close the deal, right? So you kind of figure out how to manage the process or the deal to get it done. But Dan is exactly right. But you can't do a poor deal. So make sure that first deal is the right deal. I would say the next thing is don't worry about the economics on your first deal because it's much more important that you do the right first deal and you get it done correctly. So what does that mean? That means that you may go to somebody like Dan or somebody like myself or another kind of experienced group to partner with because that might help you shortcut some of those challenges, right? And get to that deal, the finish line, the right way. And it's much more important that you get that first deal done correctly and it's a good deal versus worrying about your economics up front. I would say put that aside. The next thing I will say is many independent sponsors have the mindset that, I'm going to sign this up first, have the LOI executed, because then I'm going to have much more
Yeah.
negotiating
Yeah.
power over my economics, right? Over the sponsor economics. I would say that's probably partially true, but I would say that presents great risk. I would say you need to have, by the time you sign the LOI, some level of conviction that you can actually close the deal. What do I mean by that? I mean, have at least a core nucleus of capital partners, both debt and equity, that are interested enough. I'm not talking about just one. Make sure you have multiple parties because, you never know what happens during the process. But you got to make sure you have enough interest so that you feel confident you can move forward to signing the LOI and to the next phase, which is due diligence. And what does that mean? That means you're going to start ringing the bell, right? You're going to start hiring lawyers, accountants, consultants. That all starts costing money. So before you start expending that, make sure that you have some level of confidence. That's why it's important to approach your capital partners up front. I would say do it as early as possible before the LOI so that you have that conviction by the time you sign the LOI. And by the way, this is going to give more comfort
Mhm.
to the
Right.
bankers that are running the process and the business owners, right? Because why would they go with the independent sponsor firm versus a funded firm? You have to show them that you actually have the capability to close the deal. And that means that you need to have some capital behind you, right? And I'm not talking about firm commitments at this stage. It's not possible. I'm talking about enough interest that you could say, hey, I have it. Here are the people. Sometimes you have to have, support letters, et cetera. And I think obviously, as Dan said before, if you have a track record of closing deals, you have an existing portfolio, some of those concerns are dissipated, but my position is still the same. You don't want to go into this game
Yeah.
without at least half a hand, have a good hand,
Yeah, and
right?
I think the
You
right
just don't.
capital
So
providers.
I would say
Jordan,
that's the other
one
major
of the
thing.
yeah, sorry, I was going to go there. One of the mistakes that a lot of independent sponsors make is they come at a deal with two primary objectives. I'm not going to give up control, and I'm going to minimize dilution. So I'm going to borrow as much as I can, and I'm going to have control, give away as little of the equity as I need to. The best, most successful independent sponsors realize control doesn't matter. If you have the right partner and the right deal, control doesn't matter. You just get the deal done, and once you've gotten one deal done, it's a good deal. You get another deal done. Now capital's coming to you. Now you can determine if you want to have control, don't want to have control. But for the first deal or two, it's natural. I understand it's human, right? Like this is mine. I found it. I took the risk, right? I took the risk to do this. I left without a safety net. I deserve to get as much as I can. It's a huge mistake. It's that point is incredibly important. Get the right partner. Don't worry about economics on the first deal. Just get it done, make money, and you'll be. I mean, build money over a portfolio, not a deal.
Yeah, and to that point of the right partner, you should reference check the capital providers of people who did not have control. You'd be like, hey, what do these people actually like to work with?
Yeah.
They control the board. You got a transaction fee, you rolled it into the deal, but you don't actually get run the board. You might not even have a board seat, but like, what do these people actually like to work with? And I think that, those reference
Hmm.
checks of the other independent sponsors that they worked with are pretty critical. So,
Yeah, absolutely. And that's why this is such a great community because you can, reference these firms, these capital partners with
I
your
love it.
fellow independent
Um,
sponsors.
all right, we got 2 minutes left. We're going to do a lightning round. Starting off with Dan, what was your first job?
Accountant.
Accountant. That's it. What about high school or elementary school?
Yes.
First
Oh, I
dollar that you
swept the
made.
floors of my neighbor. I literally scrubbed the floors of my neighbor's daughter's dollhouse. That was my first job.
I love it.
It's true. It was a shed, and I would scrub the floor.
I love it. All right, and then
It
Doug,
was
what was the
perfect
first
trade.
job? What was the first job you did in the family business?
Well, I mean, I worked for the family businesses, but my first job outside the family was delivering newspapers when I was in middle school, I believe. And I still remember that to this day. We're living in New York City, and I remember getting chased by dogs. And what I had to do is, with my papers, I had
Oh
to
my
jump on
god,
top of cars to avoid getting mauled. I still have these nightmares of carrying papers and the dogs chasing me,
that was perfect
flying up
training
on
to
these
be an independent
cars.
sponsor.
It's like a movie. Yeah, 100%. I'm
All
chased
right,
by
and
dogs
Dan,
now
if
all the
you
time.
had a few words
Different
to
dogs.
describe Doug to somebody who didn't know him, what would those be? And Doug, the other way around to Dan.
Industrious, entrepreneurial, integrity, um, intelligence,
I
creativity.
love it. Doug,
Um, Great guy, first of all. Just a pleasure to be around. A great human being. I would say Dan's done some incredible things in his career. I know his family as well. He's done incredible things there. He's just a great dad. But he's done some incredible things. I mean, with Comvest and everything else, Dan, you've really, I always am very proud to talk to other
that's
people about
awesome.
Dan when
That's
his
very
name
nice of you
comes
to
up
say. I like to
as a
say I've made
result.
a lot of money for a lot of other people. Yeah. So that's the sad reality. Now it's time.
Time to
It took
make
me
money for
30 years to
yourself.
realize that, but better late
Yeah.
than never, I guess. So show me the way, Doug.
All right. Well, guys, this has been a fun collab episode, and we'll have to
Happy
do
to.
another one again because we're going to be doing a lot more content around independent sponsors. Thanks so much for coming on the podcast, guys.
Amen.
See ya.
Awesome.